Hey everyone, welcome back to Corporate Decoder, the place where we find the hidden drama in corporate filings. And today we're looking at Ventas Incorporated. They've been busy behind the scenes and it looks like they've tweaked something big with their borrowing power. So this is a current report, meaning something important happened recently, specifically on the 7th of January 2026. Ventas, a real estate investment trust or REIT that focuses on healthcare properties, has made a significant move with their debt. Think of them as a landlord for hospitals and senior living communities. What they've done is amend their existing credit agreement. This isn't just a small change, it is a pretty substantial adjustment to how much money they can borrow. They've essentially renegotiated the terms of their loans to give themselves more flexibility and access to more cash. Let's break down the numbers. Their existing term loan facility, which is basically a loan for a set period, has been bumped up. It went from $500 million to $700 million. That is an extra $200 million they can tap into, but that is not all. They've also introduced a brand new facility called a delayed draw term loan facility. This one is for a massive $550 million. A delayed draw loan means they can borrow money over time as needed, rather than all at once. Now here is where it gets really interesting. After all these changes, Ventas can potentially borrow up to a staggering $1.75 billion. This gives them a lot of financial muscle. It is important to remember that this is their borrowing capacity, meaning they don't necessarily have to borrow all of it, but it is available if they need it. So what are they doing with this new increased borrowing power? A big chunk of the newly available money, specifically from the increase in the term loan, is going to pay off an older debt. They're using the funds to fully repay their existing credit and guarantee agreement from September 2023. This effectively means they are cleaning up their balance sheet and consolidating their debt. Once that old debt is cleared, that 2023 agreement and any related guarantees will be completely wiped out. This is a good sign, as it shows they are managing their debt obligations, refinancing in a potentially more favorable environment, and simplifying their financial structure. Now, let's quickly look at their stock. Ventas, or VTR as it is traded on the New York Stock Exchange, is likely to be impacted by these financial moves. While this filing doesn't detail their current stock price or revenue numbers, understanding their financial flexibility is key to understanding their overall business health and future growth potential. The really juicy details, like the actual contract for this amendment, are usually tucked away in the exhibits. Here, they've listed Exhibit 10.1 as the Second Amendment to Credit and Guarantee Agreement. This is the full legal document spelling out all the nitty-gritty. We won't go through the whole legal document, but it is good to know where the original source material is. And it is signed off by Carrie S. Robert, who holds some pretty senior titles in the company, including General Counsel and Corporate Secretary, indicating this is a significant legal and financial maneuver for Ventas. So what does this all mean? Ventas Inc. is significantly increasing its borrowing capacity, consolidating its debt, and potentially positioning itself for future investments or to weather economic uncertainties. By paying off older debts with new, potentially more favorable ones, they are showing proactive financial management. This increased flexibility means they can more easily fund property acquisitions, development projects, or provide a buffer during challenging economic times. For investors, this suggests a company that is planning for growth and stability by shoring up its financial foundation. While we did not see specific revenue or profit numbers in this particular filing, this move towards greater financial maneuverability is a strong indicator of their strategic outlook. It demonstrates confidence in their ability to manage larger debt loads and suggests they likely have expansion or strategic initiatives in mind. The key risk here is always the potential for overleveraging, but by refinancing, they may be doing so at a good time for now. Ventas appears to be doubling down on its strategy, making sure it has the financial tools to execute it. Alright, that is our breakdown of Ventas' latest filing. What is your take on these financial moves and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.